There is a narrative in the American media that has been growing more and more every single year. The narrative is this: you can't buy a house. You'll never buy a house. You shouldn't buy a house. Housing's unaffordable. You'll never own anything. Accept it. I'm serious. We see the articles all the time. It is all doom and gloom. It is, because of the boomers, because of this, because of that, you'll never own a home. And there's also media personalities who give advice like, you should never buy a house. Buying a house is a trap. So as we hit the end of the year, I thought it would be a good idea to talk about this narrative, some of the people who are fueling it, and really look at the arguments to go, well, is this real, or is this clickbait, or is this a hidden agenda, right? And sometimes it's all three, right? So today we're going to be talking about Grant Cardone. Grant Cardone is amazing. He is one of the original, I would argue, social media influencers. His ability to speak, man, that guy can make money from anything, and he really can make money from anything. Now, I think it's important whenever we're doing a video like this, when we're talking about housing, to be very transparent about who gets paid and how they get paid, okay? So I am a mortgage lender. I've been a mortgage loan officer for 17 years. I'm licensed in 48 states. My team's one of the top purchase teams in America. All I do is talk to buyers all day. I get paid when you buy a house and you work with me, okay? Now, Grant Cardone has many businesses. However, one of his businesses that he talks about that fits into this is Cardone Capital. Cardone Capital buys apartment buildings and leases them out. Big landlord needs tenants, right? And you, right, remember, he doesn't think you should buy a house, but he does think you should invest with him so that he can buy apartment buildings and then rent them out. You're supposed to stay renting as well. Don't forget it. Okay, so what's his quote? And the quote is this: "The house for most people is a nightmare, not a dream. At the very least, it's a trap." Now, he's talking about owner-occupied home ownership. So what that means is the house that you live in. His basic advice is you should rent the house that you live in and invest elsewhere, because the house you live in is not an investment. Now, I would argue the house you live in is a long-term investment, right? If you look at how Americans have historically built wealth, it is through housing appreciation. But let's not dive into that. Let's dive into his arguments about why it's a trap and why it's a nightmare for you. I'm pointing a lot because it's important for you to own the house you live in. Okay. Number one, high insurance costs. It's always interesting to me because I'll see this one as an argument that people have for you shouldn't buy a house because insurance is expensive, taxes is expensive. And I'm always boggled by it because I'm like, do you think the landlord is not passing it on to the renter? Like, the whole concept of a landlord is to buy a property, right? And then have the tenant pay for your mortgage, your taxes, your insurance, so that ultimately you, the landlord, own an investment that's appreciating that someone else paid off for you. That's what buying an investment property is. I help investors every single day. That is the goal. So saying you shouldn't buy a house because of high insurance costs, well, then I guess you shouldn't live there either, because whether you own or you rent, that high insurance cost is gonna get passed to you. So I'm gonna call out that that first argument is BS, okay? BS. And in regards to high insurance costs, it depends on where you live. If you live near the water in Florida, where a lot of his apartment buildings are, yes, that is some of the highest insurance in America. And whether you rent or you buy, you better be ready to absorb it and be ready for increases, whether you own or you rent. Okay, second argument, maintenance and repairs. Okay. Yes, when you buy a house, you need to pay for maintenance and repairs because you own the property. Now, if you're a tenant, should your landlord do maintenance and repairs? Yes, How many do? Seriously, like, I'm sorry, but like, it's so rare that I actually hear about a landlord that's like on top of it with maintenance and repairs. You know, you have so much corporate ownership now where you're going through these management companies that may or may not get back to you. But yes, in theory, the landlord would cover maintenance and repairs. So that's fair. If you're like, I don't, you know, if something breaks, I'm just going to leave the house, don't buy, right? You have to be honest with yourself about, are you ready to handle maintenance and repairs? You know, there's stuff that you learn being a homeowner that you never thought you would need to know in your entire life. But if you budget appropriately, it can be okay. And that's the key with any of this, because it's like, look, if you're in, let's say you're in a single family house and you're renting and there's a lot of repairs that have to be done, do you think your landlord's not going to raise the rent to try to offset all the money they just put in? It's a business. Of course they are. Like, are there landlords out there that don't raise rents? Yes, but it's very rare, and it's becoming more and more rare as the days go on because of corporate ownership of single family homes as well as apartment buildings. So I think that one's a draw. This argument that he has, I do agree with. Lack of flexibility. I do agree that once you buy a house, you are committing to an area for at least a couple years, okay? Now, if you're in a job, and I see this a lot with doctors where maybe they're in their residency and they want to buy a house, but they may be going somewhere else as soon as that residency's over. With them, I'm usually having the conversation as, hey, like, if you got a really good job offer, you know, 2 counties away, would you take it? And if the answer is yes, then I'm advising, hey, like, let's not buy a house right now. Let's wait, keep on stacking cash, keep on doing all that good stuff, but let's see where your job's gonna put you, see if you like it. If you like it, cool, let's go home shopping, okay? Now, look, there are some jobs where you're gonna move every 2 to 3 years. We see that with the military a lot. Should they not buy houses? No, they just need to be mindful. That's the thing. There's certain opportunities when you have a job that moves a lot as well. You know, if you know that you're going to be buying a house and you're only going to be there for 2 to 3 years, you need to be looking for A, will it appreciate? Or B, what will it rent for? Okay. And look, those are 2 things I look for whenever I buy a house, because I always want to know that if there's some amazing opportunity, I can walk away, okay? Now look, does every property cash flow, meaning you can find a tenant who will pay as much as your mortgage immediately? No, but do properties cash flow over time? Yes. Okay, so really important on that, but I do agree. I do agree that owning, you do have a lack of flexibility, which in situations like the doctor residency, getting a job a couple counties over, could be problematic. You know, if for instance, let's say your mortgage is $5,000 a month and it will only rent for $4,000 right now, you're gonna be $1,000 in the hole. Now, for anyone going, see, tenants get a deal. Cool, look at those numbers again in 5 years, and I guarantee you that tenant will be paying more than what your mortgage is. And if you're in a 30-year fixed mortgage, which is what you should get, you're not gonna have huge issues. Okay. The next one was interesting to me because it doesn't really play into residential real estate. Financial risks. Mortgages tied to fluctuating property values present a significant risk. Whew, okay. No, they don't actually, because if you do a 30-year fixed mortgage, your payment's going to be the same regardless. If property values go up, your mortgage payment's the same. If property values go down, your mortgage payment is the same. You know, if you did some sort of exotic loan or a balloon loan, or like, I don't even know what you'd be getting that's tying it to values, like problematic. If you're putting yourself in a situation like hard money lenders, yeah, don't do that. 30-year fixed, if you're like, Jen, I'm gonna live in this house for 5 or 10 years, does it matter what it's worth 6 months from now? No, it matters what it's worth 5 to 10 years from now, right? For instance, you know, I have a property in California where at one point it was worth like a ridiculous amount. Is it worth that anymore? No. Is it worth more than what I bought it for? Yeah. You know, do property values fluctuate? Yes, but the only time it impacts you is if you're selling, right? It's just like when someone's like, oh, I've got $500K in equity. You can't touch it. You're not doing anything with it. Like until you go to sell, it's just sitting there. So I don't, like if you're going to buy a house, I would urge you to do a 30-year fixed mortgage. Stay away from balloons, loans. Don't do hard money. You know, if you're not in a position to do a traditional loan, definitely try to get in a position so you can, so you're not doing riskier mortgages. The next one's somewhat legit. Unexpected expenses, emergency repairs. Okay, so let's talk about that. As a homeowner, can you have unexpected expenses? Oh yeah, totally. Water heater goes out, air conditioning goes out. You know, would a landlord, if you rented, paid for that? Yes. So what do you do? Well, when you're looking at buying a house, make sure you get a thorough home inspection. Go through every item and start budgeting. Like, I can't stress that enough. I'm a big proponent of when you first buy a house, instead of buying a ton of furniture or doing any upgrades, start rebuilding your savings. That's a general rule for life, right? Like, you could have unexpected medical expenses. It doesn't mean you won't go outside. It's the same concept. So overall, you know, here's the thing. And one of the other notes I have in here, I just paused because it was interesting to me. He references Warren Buffett, Steve Jobs, Elon Musk, and you know, he says, oh, you know, Elon doesn't have houses, which who knows if he does right now. Like, there's rumors of a $12 million compound. Warren Buffett's actually had the same house for, I would argue, almost his entire life, right? He's never been a big, flashy real estate investor. He's investing in everything else, you know, enough. And he actually owns multiple mobile home parks. Interesting, right? And then, you know, Steve Jobs. Whenever people are referencing big names like that, how is that a comparison to you and me? You know what I mean? It's like, okay, like, you know, and look, I think Elon Musk actually just bought a $12 million compound in Austin, but who knows, whether or not, let's say he doesn't own any houses. How the hell is that relatable to you or me? Right? Like, that's the thing that's so interesting, is it's like when they're like, well, this billionaire doesn't believe in home ownership. That billionaire never has to worry about a roof over their head. The rest of us do. And, you know, I was looking at this Reddit thread, and it was making me laugh because it was someone showing the stock market going up, because the stock market's been going up recently. And it's like, this is why you should invest instead of owning a house. And it's like, you can't sleep in your stock, friend. You can't sleep in your stock. You can't sleep in the S&P 500, right? You can't. You can sleep in a house. And I think that's what a lot of these people are missing, is they're missing the common element that you, me, we need roofs over our head, right? We need somewhere to sleep. So if we're going to invest in something, investing in something that also gives us another benefit of providing shelter, security, and stability, that makes a lot of sense. Who knows? Maybe one of us will become a billionaire and we can chime in and say, oh, home ownership's silly because I'm a billionaire. So anyways, overall, look, he owns a Cardone Capital, where you can invest, and he buys investment properties and rents it out. You're still a renter, so you could end up renting the property that you invested in a tiny portion instead of buying your own. So careful when you're listening to people. Make sure you're weighing it out, and make sure you're looking at your unique situation, because that's the deal. It depends on you. Thanks for watching.